Hello everyone, I'm Electra Frost from Digital Playhouse, and this is an Accountants on Chain event. Today we have Bassil from DETOF with us. He's a Web3 accountant, or you call yourself an autopilot of a Web3 accounting on your LinkedIn, which I thought was, that has something to do with your automation, I suppose. You can tell us about it in a minute. So thank you everyone for being here today, and good on you for being on the front foot of technology as accountants. It's very forward thinking of you at this busy time of year to be learning about crypto businesses, perhaps before you're even dealing with them. And so, yeah. So, I think after Christmas, when our Australian tax season is over, more accountants will realise they do need Web3 accounting tools as well as crypto tax tools, and that they're not the same thing. And more clients will be coming out of the woodwork saying, I've got some crypto in my business. So, yeah, that's why we're here. And, you'll start thinking, hey, it's not so bad. I can put it through the crypto tax return software. But how are you going to get it into the accounting system so you can do your financial statements before you do your tax return? That's the tricky bit. You have to have a game plan from day one with a business client who's got crypto, and that starts with choosing the right tools and developing processes and policies around that tooling. Their accountants are already doing it, and they're encountering all kinds of problems that Bassil knows about, that he's going to give us a heads up on today, the issues we can run into. Yeah, and we're trying to get blockchain data through systems that bring it into our accounting software like Xero and QuickBooks. So yeah, look, there are products on the market. They haven't been around too long. They're at different stages and suited to different types of businesses. And, there's improvements all the time. And so this is all about a continuous improvement strategy. And yeah, so Bassil, before I introduce you, I should just say that this disclaimer applies to Digital Playhouse and also to Bassil and DETOF, that everything we're sharing with you today is just to inspire your curiosity to go and learn for yourself and do more research. And so I like to say, if I said it, I didn't say it. Okay, so no liability. We'll just help you get started. And look, why are we here today? Digital Playhouse Foundation, we're a charity in central Queensland, and we're a registered charity under which the Accountants on Chain Collective Learning Project runs, and really appreciate those of you who could make a donation today. It helps us to fund these events and our learning centre. And yeah, in future it might be a membership fee or an NFT membership that's in development. So yeah, look, financial literacy, inclusion go hand in hand, all ages. We have a learn, build and support kind of framework. We teach people to learn in the School of Bitcoin, which is being developed, a decentralized autonomous education system, very much around the principles of Bitcoin applied to Web3 technologies. What is money? That's where we begin. Go back to Accounting 101 concepts. Stacks Australia to learn to build on the Stacks network, which is secured by Bitcoin. And we have our support branch, which is Accountants on Chain, because we need to help businesses get into this space and guide them and guide regulators, and we're very important. All right, so that's mine. Now, Bassil, can you tell me a bit about, can everyone see us now? I've stopped sharing, haven't I? So over to you to share when you like, but I'd love for you to tell us a bit about yourself and how you got into crypto accounting.
Yeah, definitely. So first off, thanks for having me. I really appreciate it. Thanks everyone in Australia for listening in. I'm in Switzerland right now, so a bit of a time difference. My name is Bassil. So basically how I got into crypto accounting, a little bit of background, I'll just take you back a little bit. So I used to be a temp CFO in Silicon Valley, and I used to have like a range of startup clients anywhere from C to Series C, and used to do everything kind of financial for them. And then I moved to Switzerland. In Switzerland, pretty much, I thought about opening my own practice. But over that period, I realized there was a serious gap in the payroll space, actually. And so I launched a payroll startup here in Switzerland called Ernie. Started doing pretty well. In that process, I started to onboard some accountant and some crypto clients. And it was kind of through that, I would say, process. So I was already kind of into crypto before that, but then I realized the challenges of crypto when I started to onboard these accountants and customers, learned that, yeah, there was a significant lack of tooling, but not only a significant lack of tooling, there's also kind of a significant lack of like knowledge of the space itself. You're going to need that as well if you're going to do any kind of form of accounting.
Yeah.
And so what I found is a lot of these accountants were kind of trying to skip the accounting part because of the lack of tooling and also maybe a little bit lack of knowledge. And they went straight to just kind of trying to file tax returns at the end of the year. And they kind of like pieced together these kind of tools that like were meant for like private maybe, or maybe large enterprise. And it was mostly just kind of tax related things. And so they end up doing a lot of work at the end of the year, because yeah, they just kind of like combined all the transactions throughout that year to just do it once. And it was kind of messy, and it took a lot of time from the client, and there was no clear process. And then when it came down to like 2022, they thought about maybe having some kind of monthly recurring kind of reporting of financial statements for their clients. And they realized that to do that would cost their clients way too much money. And I'll show you kind of some examples. And it would just cost them way too much money. And the process would be a complete headache in regards to kind of lack of tooling and the administration behind it. So yeah, that's kind of how I'd say fell into the space. And we kind of like decided to try and solve the problem ourselves pretty much, because I was advising the accountants and I was kind of working with some crypto clients, and I thought, why don't we try to build the accounting tooling to solve our problem? And then in the midst, kind of, we realized that actually like this problem is a recurring problem across the accounting industry. And that's kind of how we kind of fell into this. My co-founder, Sebastian, he's also on the call. He's on the technical side of the business. And I'm on kind of more the accounting finance side.
Okay.
So yeah, that's kind of how I fell into it.
And I love that you're identifying there, like the monthly reporting is just too much for them, but it is what they need. I've remodeled my practice in the last 2 years to move away from annual. All of our clients, we do monthly reporting, and I'm trying to get that crypto into that monthly reporting process, and it's got to be smoother. So let's
start. It's kind of a broken process. I'll kind of show you guys maybe a little bit of what the process is like right now. I'm not sure like the maturity level of the audience in terms of their crypto knowledge, but anyway, I'll just start from like the basics.
Everyone here will be pleased to look ahead to see where others have gone wrong and what they can avoid doing and do better. So let's go.
Cool. All right. So actually, before I share, I wanted to say I think the idea of an NFT is really cool. I saw, if you're thinking about dropping one, I saw basically the first ever accounting NFT launched by a UK accounting firm.
Yeah, Mina.
Mina.
Yeah,
Mina. Yeah, Mina.
I don't know what to do next because I'm not used to it.
I bought it as well. Yeah, you got to mint it, but after you mint, you kind of just join the Discord and you kind of just like you hold. But yeah, so they launched kind of like they launched a pretty cool NFT. So if you want to get tips, yeah, Joe will kind of help you out.
We'll do that for accountants on chain. Yeah, we'll appreciate that help. All right. Thanks.
Yeah, definitely. All right, cool. I'm just gonna share my screen here. Weird. I'm not getting any. Let's see. Is this one? Oh, hold on. Oh, it's gonna kick me out for a second.
So everyone, while we were just waiting for Bassil to come back in, I'll have to readmit him. He's just had a little problem with screen sharing. I just wonder if any of you have had a look at some of our other sessions that we've had. Just to put this into context, you can see on our Accountants on Chain page that I've just posted a link. Okay, here he is. You can see some of our past events and some of the other software that we're practicing with. So all different ones. Bassil's product is just entering the market now, I think. He'll tell us himself, but yeah. All right.
Sorry about that, Electra. Yeah, I got booted out. All right, cool. So this is us. Her name is called DETOF. If you ask me what it means, we really don't know. We were just looking for like a short 5-letter URL. So that's kind of what we went with. And our goal is pretty much to smoothen out the accounting process in Web3. And we try and do this via this kind of like all-in-one kind of like accounting tool, which we are building towards but don't have yet. So I want to be very clear. We're like building towards this product. We have kind of a very early beta that's closed right now for a few customers, but we're ultimately building towards it. So I'll just kind of get into kind of some of the accounting topics. And if you guys have questions, you can kind of write me in the chat, or you can even just like ask and stop me. Cool. So I'm just going to click through here. Nope. So kind of just to start, I'm going to start with like super basics. So like when I first got into the space, you know, my conception was that cryptocurrency was like just literally like money. That's what it should be. It should just kind of be money. But kind of from an accounting standpoint, it's important to know that like any kind of Bitcoin or ETH that you hold is actually an asset, and it actually sits under kind of current assets on your balance sheet. And kind of every time you trade that asset, you need to kind of revalue it based on a cost basis that you initially bought it from and based on the sale. And then that cost basis is liable for capital gains. So like, as you can imagine, I think like the crypto community is striving towards cryptocurrencies becoming a currency similar to like a USD or an Australian dollar. But ultimately right now it actually like it's recognized as an asset. So you got to remember that, I think, while kind of you're doing any kind of form of accounting in the crypto realm. So like if you buy crypto, for example, so here's like an example in like a zero, let's say, chart of accounts where you have maybe a Bitcoin account, you have a USDC account, and you have an Aussie dollar account. So the BTC account, the Bitcoin account, pretty much is a crypto account. So is the USDC account. It's kind of known as like a stable coin. If you guys don't know what that is, just look it up. It's super simple to figure out. And then you have the Aussie account. So what happens is kind of like, let's say you buy 1,000 Aussie dollars worth of Bitcoin. What's it going to look like pretty much on your balance sheet? You're going to credit your Aussie dollar account, and you're going to debit your kind of BTC account, your Bitcoin account, pretty much. And that's kind of what it's going to look like from an accounting standpoint. And this is kind of like a super simple example. I'm going to go into a bit more of a nuance and a bit more difficult example, but that's kind of what it would look like. So it would go from like your cash account down to your current asset account on Bitcoin, kind of in a debit and credit format. So super easy, super simple example, kind of like that, probably like one of your early clients would potentially realize. So this is kind of like a bit more of an interesting example here. So let's say you change Bitcoin to Ethereum. So Bitcoin and Ethereum are probably two of the most common cryptocurrencies. So like the question is like, is it the same as like converting Aussie dollar to USD? Like, and like the answer to that is not exactly. So when you convert the Aussie dollar to USD, you just get kind of like an exchange rate, and kind of that's it. You might get, you might get less Aussie dollar. Sorry, you might get less USD than you would Aussie dollars. But in the crypto sense, you got to remember that like Bitcoin, ETH are both assets. So like, for example, if you sold, let's say you had one Bitcoin, and then you sold that one Bitcoin, you converted that one Bitcoin, similar to how you convert Aussie dollars to USD, you convert that one Bitcoin to Ethereum, you'd get 14.5 Ethereums, because Bitcoin now is at about 20K. Let's say it's worth 19K. And Ethereum's about like maybe 1.3 right now. So let's say you got 14.5 Ethereum. So the Bitcoin today is worth 19,000. You had initially bought that Bitcoin though at 10,000. So on your balance sheet, that Bitcoin is sitting down there as 10,000. And you're technically selling the Bitcoin in order to buy the E. So you're selling the Bitcoin for 19,000. Therefore, you're getting cash. So it debits your cash account. It credits your BTC account, because now that money's out of the BTC current asset account. You have to report a capital gains. So on your P&L, you'll see the kind of a capital gains you've got to report of 9K. You got to report the cash, and then you use that cash then to basically kind of buy the ETH pretty much back. So it kind of like debits your ETH account. So the key thing to figure, the key important part here is basically the capital gains. So you've got to report that capital gains on your P&L account, so that you're able to kind of like kind of ensure you kind of aggregate all your capital gains at the end of the year, and then kind of like pay any capital gains tax on it. So this is like the accounting part. So what happens typically is like this accounting part that you may do on a monthly basis is typically skipped by a lot of accountants, because I'll show you why. The administration behind, like, let's say getting all that data, it's not as easy as like pulling bank feeds into Xero and getting all that data nicely in there. It's very much like a mashed salad of different areas where you're pulling data, and then you're like uploading that into like some kind of a tool, and then you're basically like trying to kind of make sense of it, and then you're creating like journal entries into Xero, or you might get a push into Xero. So like the effort to kind of like value ratio isn't there yet, because the tools unfortunately are just not there yet. So this is kind of what you would do as an example from an accounting standpoint, but this is usually skipped, and it just goes straight to what's my capital gains? Like, what do I got to pay in taxes? That's kind of what it's usually that's kind of what it usually looks like.
And then you kind of reverse engineer the accounting journals to make the balance sheet look kind of okay, and just make sure
exactly.
is right, and cross your fingers and amend next year.
Yeah, exactly. You kind of just like you kind of just like take all the transactions and you kind of just you just like make one huge journal, maybe like one huge journal at the end of the year where like all of it slumped up and summed, and then like that's kind of what it's gonna look like on your balance sheet. But yeah, I mean the reason why it makes sense, right? The reason why is the tooling's not there and clients don't want to pay a ridiculous amount of money on an hourly basis for accountants to basically do like fetching of data just like randomly all over the place.
But accounting's not all about doing tax. It's about helping clients, successful businesses. So that's where we're that's the space we're working in as advisors these days, or striving to get into. So yeah, you're right. So the immediate short term is just to file taxes, but like the long term, businesses would like to get some kind of visibility on their books so that like they could plan and make decisions. Like if I talk to the crypto clients in Switzerland, like they don't know. They don't know what their like monthly burn is. They don't know like what their earnings are at the end of the month. They have no idea. They're just kind of like riding blind, and like and they might ask the accountant to give them some kind of a picture, maybe at like the 6-month mark, but otherwise they're just riding blind. Yeah. So okay, cool. So I'll just keep going. So one of the key things that like I noticed is like a lot of like so there was a customer here in Switzerland who I was helping a little bit. He was complaining that his accountant didn't know what a gas fee was. And I know like, it's like, okay, if you're new to this like Web3 crypto space, I mean, you're not going to know what a gas fee is. And you're not going to know what a lot of other terminology is, like staking and minting or liquidity pooling or mining. So all this kind of like lingo and concept is going to be totally foreign to you. And you're going to have to learn this. And it's similar to kind of when you get a new client and maybe like a new industry and you're trying to understand their business, whether it's like, I don't know, it could be restaurant, construction, software, but like ultimately, like you have to understand that industry, and understanding the industry I find is a bit more easier than trying to understand this kind of like whole new movement. Like it's kind of like when the internet was invented in the 90s. It's like accountants are trying to understand this whole new concept, and it's it just like takes time for them to understand it. And I think if you're going to take on these kind of crypto based clients, you've got to like be aware that you've got to start to like learn and understand kind of this whole space and whether it's something you really want to take on. I mean, you might have a client who has maybe like 1 or 2 transactions and it's super simple. It just sits on the balance sheet. That's okay. You can take that client on. But if you have a client that like is looking to ramp up these transactions to like 100, 200, 300, monthly transactions, like you've got to like understand the business, and to understand the business, you have to understand this Web3 world, and to understand the Web3 world, you have to understand like these weird terminology, these weird words, and these new like revenue streams that like we've never seen before, whether it's like minting, mining, liquidity pooling. And so I won't go into the other kind of details, but that's kind of some areas where just to be aware that like, crypto does require like a kind of like a whole other sense of knowledge. And I think like with that, what we find is like accounting firms, the best accounting firms, actually what I find is the guys who hire, like they have the accountant that's like legit accountant. He knows like IFRS, GAAP. And like, then you have like in-house, they hire this kind of like this known as like this crypto specialist. And like the crypto specialist, pretty much what he does, he sits in a room with the accountant and he tries to like explain to the accountant like what this transaction was or what liquidity pooling is. And then the accountant tries to make sense of that from an accounting standpoint and trying to understand, okay, like based from a compliance standpoint, this is where I should book it, and this is taxable, this is not. And so like that's kind of what we see some of the more successful crypto accounting firms do as they scale. So it's just something you guys want to keep in mind. It's very difficult to find the duo persona in one. So some person who knows accounting and knows crypto, like we've found like maybe 5 of them, and we've scoured the world, and like it's super tough because you're just like the space is so new. There's not so much content out there. And even now, if you like Google like liquidity pool accounting or like, or any kind of like mining accounting, like how to do it, like you're not going to get like the level of detail and understand that you want. You have to understand the space, and then you have to kind of apply this kind of like accounting layer over top of it. So, and we have to employ them before DETOF does. Yeah, you got to employ them before we get them. Exactly. You have to get them before we get them. Yeah, exactly. So these are the more successful. I would say like if you're serious about like kind of converting your practice into a crypto practice, like I would encourage you to really find someone who like is a crypto specialist. By crypto specialist, someone who like, you're looking for someone like, someone who's been in the crypto space, understands the activity, kind
kind of like can explain things to kind of like explain things basically to accountants and normal people. Typically someone in law, maybe like an early graduate in law who kind of like knows crypto. We know somebody basically who's working at an accounting firm here. He just graduated kind of from like a law degree, and like he's kind of like focused on like crypto, like just crypto law in general, and he's able to really kind of make sense of that world in a technical way so that accountants can understand it. So that's my recommendation. If you're serious about it, you have like clients coming to you in droves and you have like many transactions, you may want to look at like this kind of setup. And then the other thing too is you got to understand the process is like totally different. So you may have like a totally well-oiled machine on the traditional fiat accounting process side, but like as soon as you bring in kind of like a crypto client, like that you cannot basically put that process, you cannot put that client through that process. It'd be like putting like a bolt through like a vacuum. It just like, it would cling and bang everywhere. It just wouldn't work. So you've got to basically like reevaluate that process. And yeah, you got to understand the process is not going to be as smooth as your traditional accounting process because the tooling is just not there. And so that's something you really got to also like take into consideration. You can dabble with like one client, two clients, but if you start to take them again in droves, like you got to set up a process that probably isn't as smooth and easy as your traditional accounting kind of process. So yeah, just to keep that in mind, I think if you kind of do venture in this space. So like just kind of like some of the key things that happen, right? Let's say you do get a crypto accountant, they're ready to go. Let's say they're using Xero, and it's like, all right, cool. So like, what is my number one? Like, what do I do first? And the first thing is you got to kind of understand like their data set. So it's similar kind of when you ask for like bank accounts or credit cards, when you get a fiat client, you ask for wallets and you ask for exchanges. So a wallet is basically where like kind of, yeah, you house most of your crypto transactions, and exchanges is where kind of a lot of that activity happens. Like let's say exchanging Bitcoin to ETH. And these are kind of some of the more famous wallets, I would say. And these are kind of more like exchanges tend to be more localized. So these just come more localized exchanges for Australia. There might be on like some more international exchanges, like you've probably heard of Coinbase or Kraken. But yeah, that's kind of your first step, is to make sure you collect, I would say, all the, similar to how you took bank accounts, credit cards, you want to collect all your wallets, all the exchanges, and you got to make sure you've got them all. Like there's so many clients who basically just like, they forget they had a wallet pretty much that they were using like in 2012, for example, and it's still lingering around. So like, you got to make sure you get these wallets and exchanges. That's the first step. And then kind of what you're doing is you're kind of pulling data from these wallets and from these exchanges. And the data kind of looks something like that. And this is kind of like a data set from kind of Etherscan. And Etherscan kind of looks at like specifically the ETH blockchain. And you'll see kind of, these like weird, like, I don't know, crazy number, alphanumeric kind of like, digits. And kind of like you're trying to basically now sort through that data and you're trying to classify it. So here, the biggest problem in the accounting space is basically like trying to understand like where, like, what is this wallet for? So each one of these like hash things, each one, like when you see result 2, is basically a wallet. And you're just trying to make sense of like, what is the context behind this wallet? Is this Electra's wallet? Is this Bassil's wallet? What do I typically pay Electra for? What do I typically pay Bassil for? And you're trying to classify that into accounts. You're trying to also understand like, was this kind of like a sale of a crypto asset or not? And if there are capital gains on it. So this is kind of like the bulk of the work, and I'll kind of break that down for you in a bit, but that's kind of where you kind of like get the data. And there's tools like EtherScan and SolScan. SolScan's for Solana, EtherScan's for Ethereum. But like you'd have to kind of go through all these kind of like scan type of like tools to try and pull this data and try to identify it. And then finally, you kind of get to book your entry kind of in Xero. So that's kind of your last step. Once you kind of like classify, you sort all the data, you kind of make one pretty much giant journal entry into Xero. And it kind of looks like something like this. And then kind of, then it just kind of like, there you go, you're done. It sits in your accounting journal. So like, where's most of the time spent? So assume you have one crypto client, no exchanges, 500 monthly transactions. You spend a lot of time actually like sorting and trying to understand these transactions and like contacting the client constantly, by the way, like phone calls, emails, and the client's not responsive and chasing and like, all that. It's like, it's chasing times like 10 in the crypto world, because like there's so much more you don't understand. I showed you those like weird alphanumeric wallet addresses. They're called wallet addresses. That kind of defines the wallet, trying to understand what those are. So the bulk of it is really sorting, classifying transactions. And you can just kind of see it. So there's like there's a transaction on the left side of like a traditional bank statement where you have like clearly Mindy's ad agencies, Cathay Pacific, Stripe, clear like vendor names that kind of help you understand maybe what a transaction is. And on the crypto side, there's like no context. There's just like a giant, like, yeah, alphanumeric accounts. And you're trying to understand what does that even mean? It's kind of the key bit there. So that's kind of why it takes so long. So like the key thing is like what we hear a lot of the times now is like that a lot of like accountants aren't too worried about this yet. They still have time, I would say, to adjust. Sorry, guys. I got a question from Andy. Andy, just give me a second. I'm just going to get to the end of it, and then I'll definitely start answering some questions. Give me a second. I'm just going to wrap this up in like 10, 15 minutes. Yeah. So the big question is like, like time is like the big question. It's like we have time, but actually like it's regulators who are probably going to start to crack down on this because the activity is increasing. You have a lot more crypto adoption. So yeah, you do got a bit of time, but I think like 2022 in 2023, you'll start to see like a lot of more crackdown on the 2022 tax returns. And yeah, a lot more like crypto adoption activity from clients who basically want visibility on their business. So you do got some time, but yeah, it's kind of starting to catch up. I think like you're going to start to see some crypto clients trickle in, and you're going to have to start to see like, are you going to take them on? And if so, like, you could experiment a little bit, but then also like think about kind of long-term setting up a kind of a process. Keep going here. So this is kind of some of the tooling today. A lot of it is really like tax and like reporting and data dumping. And then a lot of it's focused on like individuals, so like personal tax returns or personal, and then large enterprise, like massive like enterprise. So there's no one really kind of like focusing on the SME accounting space, what we found. And that's kind of the reason why we tiptoed into it and trying to kind of fix this problem.
Yeah, I've noticed that there's some enterprise solutions, but the smaller, I'm really seeing that there's going to be a mass adoption at the SME level as more businesses copy what others are doing. Sorry, carry on. Very good.
No, you're right. Like there's no like zero equivalent in the crypto space, for example. And when we talk to Zero, like there's no real desire to kind of build out the crypto function.
No, they got their app marketplace. Yeah.
Okay.
Yeah, like, well, that's it. They're not going to go and provide what the people in the app marketplace provide,
Yeah, exactly.
They just have their add-ons. Yeah.
Exactly. That's kind of their focus right now. Right? But because the crypto accounting space is hard, like it's not an easy space to solve. And I'll show you actually the data problem is really the hardest problem to solve, not really the accounting bit. The accounting bit's hard, but I'll show you the data problem. Yeah. So this is kind of like our goal, I'd say, from a mission perspective. We're trying to accelerate the adoption of crypto by facilitating compliance. So we're trying to make people more comfortable in adopting crypto. These are like some quotes from some of the Swiss clients who basically use, like a combination of Excel, CSV, Cryptio, Coinly, and whatever, pretty much to manage their transactions. This is another one pretty much where they talk about like, it would be great to manage in one space. So what we do is we try and pull your crypto transaction, we try and automate the labeling, and we try to push that to zero. Okay, so what does that mean? And again, like we're building the accounting layer for SMEs. So like, remember those like long, like alphanumeric wallet addresses that I showed you earlier with like the crazy numbering and the alphabets? Basically, like what we try to do is we try to allow you to label those. So you can now basically like say, okay, this is Electra's wallet. And then once you say this is Electra's wallet, we auto label all the wallets with that weird alphanumeric numbering as Electra's wallet. So now you have immediate transaction context. Oh, damn, okay, this is now Electra's wallet. So I kind of I pay Electra every month for advertising costs. So there you go. I can just basically book that into advertising costs, or maybe it's payroll. And so we basically auto label all that. And then similar to the account, then you book it into, let's say, advertising, and we auto label advertising account for all of Electra's wallet for you pretty much. And that pretty much saves you a ton of time, right? So like no more like trying to guess what that wallet was, no more labeling one by one, no more trying to read that detailed like wallet before you label it. So we try and save you some time, again, in the area that takes the most amount of time, through that like auto classification, auto labeling kind of part. That's kind of the first part. Again, this is the data problem. We're trying to solve the data problem first. That's what DETOF is doing. And then we're going to the accounting, but this is first data. So we're trying to solve that data problem. So that's kind of one of the key features we're looking to kind of go for. The next one is like tagging. So like a lot of times you get into a situation, you don't understand what this transaction is, and you're like, okay, basically like how do I get this context from my client? Like I've called them a few times, I've emailed them, it's not really working. So what we do is we allow you to tag the client on the transaction. At the end of the day, the client gets an email. It lists all the transactions that require his feedback. He clicks on the email, he's redirected to DETOF. There, he's able to basically like give you context on that transaction or label it directly. And so again, like it saves you that time. Like we're trying to save you that time with that client so that you no longer kind of like engage in so much back and forth. That's the other key feature that we found is like really killer for a lot of the accounting community. And the next one is obviously just to sync to zero. So again, like just syncing to zero, making sure the entries are in, make sure they're correct, and kind of facilitating that kind of like bridge between your fiat accounting system and the kind of the crypto world. That's kind of the last key feature. So that's I would say is kind of what we're striving for to solve on the data set side. And then over time, this is another actually key feature as well. We also like found there's an issue in reconciling transactions. So when you pull your transactions, let's say from, I remember if I showed you guys Etherscan and SoulScan, where you get all your transactions. So when you pull those transactions and you kind of put them in Excel maybe, or you put them in another area, you're trying to basically then like book them into your accounting system. You got to make sure you capture all the transactions and you got to make sure that the balances are correct. And so reconciliation is another key problem in our space to make sure you pulled all the transactions. And that's something also too, we're going to try and solve. Again, this is all part of the data problem. Like data is a huge kind of getting that data, streamlining it. That's kind of a huge problem in the space. And then the last one is kind of once we solve data problem, we found that like we have some customers who are like crypto first, like crypto native. They index more crypto. They do like 300 monthly transactions in crypto and like 10 in fiat. And they're like asking like, why do I got to use a fiat based accounting system? Like, I don't understand. Like if you guys are doing like, if I'm mostly crypto, is there something that's crypto native for me that I could just use? And they make a super great point. And in this part, pretty much, we're going to build this a second phase, but we're pretty much betting that crypto adoption skyrockets, right? It's like Coinbase in 2012. They were building an application betting that crypto from a personal perspective is going to skyrocket. And so this is the bet also we would make pretty much on kind of the crypto business SME community, that they will start accepting a lot more crypto in the next decade. And then kind of like over time, they will need potentially tooling that services them rather than just kind of like fiat accounting systems.
And like DAOs, for example, we don't have so many in Australia yet because we're waiting on regulations, but it's all kind of happening. We don't know how it'll go. There might be some global uniform approach. We don't know. But people are doing them anyway. But typically of a DAO or a startup that has gotten their seed funding in crypto, they're going to be crypto native, Web3 first.
Yeah, exactly. They're going to have their own token. And so DAO is pretty much, just for the guys who don't know on the call, it's like a decentralized autonomous organization. It's like an organization that's like fully run, fully decentralized. There's no central authority. The number of tokens that you have in that, like, let's say entity defines the governance structure that you can kind of put forward to that entity. So that's kind of like a DAO. You guys can do some research in there. But yeah, those DAOs are purely crypto native. So they don't even do, when I say crypto native, it means they use crypto transactions like only or mostly.
What about an exchange? So like a crypto exchange.
Yeah, like on the exchange side, pretty much. So for them, they would have a mix, I would say. And I think like we have a crypto exchange on here, actually. I think Simon just wrote me. So I'll get to that in a bit. But yeah, like on the crypto exchange side, maybe Simon's better to answer that. But I would imagine they have a mix of like maybe crypto and fiat holdings. And I would say like for them, like they would be more enterprise focused. So I don't know if I don't know if like basically our solution would be like tailored, like right for them. Because they just have like, they're more enterprisey. I feel they would have maybe a lot more kind of a customized setup that they would need. So we don't know yet, but we haven't really talked to too many exchanges on that side. But I would imagine they have a mix of both. I'd say fiat and crypto. And Simon probably could like correct me if I'm wrong there, but that's kind of my assumption. Mm-hmm. Yep. Cool. I'm just going to keep going. Finally, this is like what it would look like. Like you'd kind of label your transactions, and then kind of you'd push that into kind of your very own P&L and balance sheet view that's specific to like crypto companies, and have kind of like like a crypto view, like a crypto first view. That's kind of like where we
here towards getting our fiat, our bank feeds, our legacy bank feeds into DETOF and creating the financial statements in DETOF.
Yeah, so that'd be like a next step. Like, so just to be clear, we're not going to get to this year. That'll be like a next year, I would say, endeavor. This year we have to solve the data problem. The data problem we find is like a super like annoying and massive problem to solve, right? There's so many coins and alt tokens out there. And there's also so much like activity that's done, like whether it's liquidity pooling or mining, that's just so different and varied. We have to solve data. before we can get to the accounting bit. Like that's the reality of it. Like the data that we're solving is kind of going to be used to fix it, to help with the accounting part. But in terms of adding like P&L and balance sheet and cash flow and AP and AR and AP kind of into DETOF, that's like a second layer once we fix data.
Okay, it's really interesting to know that that's on the horizon as we sort of approach planning with clients that are looking to enter this space. But what kind of data problems are we having?
Yeah, it's basically just like finding, like, first of all, like finding the data, I would say. I think I mentioned earlier, like classifying
data feeds like not coming in properly. Are they, what should we be on the lookout for? That
yeah. So you're going to like every chain, you're going to like every exchange, you're like downloading that data. You're then pretty much trying to upload it into some tool. And then you basically maybe are missing certain transactions where you don't see the data. Like some transactions maybe are clumped together. So for example, some NFT data, pretty much transaction data is just like clumped together. You have to basically decouple it. Or pretty much like you might miss certain like revenue data, maybe from liquidity pooling that you might not have seen when you pulled it off the chain or from the wallet. There's also these things called like smart contracts that govern liquidity poolings that like, yeah, are just kind of like, you just don't, just like not recognizing the revenue when it's actually like done versus when you actually get the money. So yeah, there's like
NFT transactions.
Yeah, like NFT transactions as well that maybe sometimes come like aggregated pretty much, and then you have to kind of like decouple it. So yeah, I mean, like it's and I'm getting some props from Simon, so appreciate it. But yeah, like I mean, yeah, there's like the data problem is like right now on the accounting side, the data problem I think is the biggest problem in the space. And I think like if you solve that as like a phase one, then you can solve then you can get into the accounting side, I think, as a phase two.
Okay.
Yeah. But I appreciate the question. Yeah, keep coming. So I'm almost done. Give me a second, guys. So this is kind of like where we kind of trying to compare to each other. I kind of already went through it. We're trying to support a few more altcoins, reconcile transactions. I kind of already talked about this. I don't want to go and regurgitate it. This is kind of just like a summary. Electra, I'm happy if you want to share these slides out with you, with the people in the call. No problem.
Yeah, put together a bit of an article around this, I think, and the feature comparison, I think, is all important for us to sit down and have a look at, because it's not like things are better than other things, but
exactly.
It depends on the client and understanding the clients, what their present dealings are, what their intentions are, asking them why they have crypto, what they intend to do with it, what their business, understanding their business model, knowing what questions to ask. And then we look at the tooling. Like, we're all digital accountants. We onboarded our clients into cloud accounting and business tools for the last 10 years. So it's the same thing again, isn't it? Just understanding what your client's doing. And, you know,
yeah, exactly.
on tax returns in Australia, when I started out, there was a little box you had to tick. Does your business do things online? Something like that. And I'm just waiting for the box to appear on tax returns. Does your business do crypto, digital assets?
Yeah.
Anyway.
Yeah. No, I mean, you nailed it, right? You nailed, like, there's no tool that's technically better or worse than another one, right? Like, you have a great tax tool in Australia, crypto tax calculator. And it's awesome.
We have some other tools that we've used, that we've looked at in the group as well, that some people here are using, and they want to know what the price point is going to be. Is that the main thing to look at? The price points, you know, we can get to that, and you know, you might have a chat with Bassil afterwards about what his product could offer.
So I'll be open. Like from a price point perspective, we don't even know what we don't really know what our price point is yet. I'm gonna be honest with you. Like, we are basically just like making sure we build the right product first. Like, we don't really have a price point. Like, we're trying to figure that out ourselves. Like, what is a fair amount of like what is the level where we are saving you guys enough time, and how much is that time costing you? Pretty much.
And we've got to work that into our own models. Like, I charge clients a set fee per month, and I pay for their tech stack because it means I can do my job for them. But my model is different to someone who is just servicing a client once a year or once a quarter. And so it really, you know, the price, it depends how we kind of build it into our fees as well, what's needed. But yeah, the number of tokens a system supports, how much are you having to manually import as CSVs, and, you know, API connections and all that. It depends on what the client has as well, which software might suit them. So any context on DETOF?
Yeah, so on the DETOF side, like, we're thinking of creating, so we don't know the actual price points yet. We're thinking of creating a model that like basically charges based on the number of wallets and exchanges and transactions that you have, pretty much like that kind of model. like where DETOF tries to save you time is through the auto labeling part. So like we try and auto label these transactions, the wallets and the accounts, and kind of that's the part that we think is going to save you guys a lot of time.
Right. So if
And
you're
obviously
putting your resources into saving our time, then that's a
yeah, that's the plan, right? And we're trying to understand, I guess, like how much time are we saving you per, like, let's say 100 transactions. So if you have 100 transactions, how much time would you, how long is it taking you now? How much time are we saving you? Can we get a little bit of that margin in between is kind of what we're thinking as like a fair price point. Again, like we know that like, when you price, you got to be fair to everybody in the community. Like you got to be fair to the accountant, to the client, and to yourself. And so like for us, like we want to try and figure out like what is the margin that is fair to basically take.
I've had crypto software, tax and accounting software companies actually interview me on trying to work out price point. It's the hardest thing to work out.
Yeah. So for us, like
it's a problem for everyone.
So for us, what's going to happen is like we're probably going to like throw out some weird number, and we're probably going to be way off. And then the accountants are going to tell us like, wow, like this is like costing us way too much. You don't save us that much time. And then we're going to be like, okay, let's revise it. Like, because we don't really know what the margin is yet. Or let's basically not revise it, but let's also be like, okay, if we don't hit this now, what do we need to do to save you that amount of time so that we can earn that amount of value? But it's all about like keeping the entire ecosystem and community happy, right?
Finding out what works. Kind of experimental at this stage. And look, for the next year or two, accountants on chain will be, we'll be working out how to make our own practices efficient and profitable using these tools with our clients too. So we'll all get there. What have you got to show us, Bassil? While we
so listen, I'm almost done. I want to kind of make sure we have some basic Q&A. Here's just like a bunch of stuff. I want to basically just say like it's important to get to. There's some great tooling like around kind of invoicing, like Request Finance. You guys probably heard of it. Super Fluid also coming up, really cool. And then Bullet Network, pretty much. They're mostly kind of NFT invoicing and payments, but really cool kind of partnership. This is a bit of our track. This is me and Sebastian, and that's it. I want to kind of like, I know I've gone way over. I apologize. I have some Q&A in the chat, but Electra, it's up to you. Kind of like
some time for Q&A. That's all right. I'm just we've got another session coming up with Request Finance. This is a really, if you want to just click back, please, Bassil, if you've got a few minutes for us. So cool. Just that integration page. Do you have another 5 minutes or so for us, Bassil?
Yeah, definitely.
Yeah,
till 9.
We've got time. Okay, so these integrations, Request Financing is finance is an invoicing tool, like crypto invoicing, because it's really hard having all these transactions. And on a bank statement, you can see what the name of the payer was. You can kind of figure it out if you don't have a matching invoice or document or source document. The blockchain, there's no hints on there. You need to have clients are invoicing and it's attached to the blockchain transaction. You can work it out. Really easy tool. I've used it. They now have escrow services, which is really interesting, for milestone payments, and they're doing the request ecosystem is really good one for us to know about if we're interested in like business processes and other sort of complementary accounting tooling. What is super fluid? That might not relate to. Oh, that looks a bit e-commerce-y.
Yeah, Super Fluid's like they kind of like handle kind of these subscriptions. It's like honestly, like getting into it now, like I mean it's basically like a recurring kind of like transaction that is like on a time basis, kind of. So it's how like you pay your subscription like, I don't know, $29 a month pretty much. So imagine like even more granularity. Like it's
so like streamed payments. I love
this.
The real time.
That's Super Fluid's kind of like motto there. Yeah, exactly.
And Bulla?
Yeah. Bulla's more kind of like on the NFC side. So they're focusing on kind of like NFT invoicing and kind of like payments on the mostly on the NFT side, pretty much, and reconciling NFT. So there's an NFT data problem, and they're also trying to help there. But yeah, that's these are kind of like
kind of API integration with these. So these can be used from within your tool, or it'll be.
Yeah. So we're not interested in, so for example, DETOF, we're not interested in building out payroll. We're not interested in building out expense reporting or invoicing. Right. Like we would just basically want to do like data, bookkeeping, and then we want to integrate with some of these like players right here on Requests and Super, basically, because they're doing. I mean, it's so hard to do just like one segment of that accounting and finance space. Yeah. We don't want to do it all. So we're basically looking to kind of like integrate with these guys at some point.
Okay, and then become the general ledger.
Yeah, exactly. Then become general ledger.
Okay,
exactly.
Cool. That's really great. And look, I'm going to be after this event just sharing Bassil's details. I'm sure he'd love to hear from any of you. and our links as well. Now's a really great time to have a look at the questions. So I think we've gone through and answered a lot of this. Now, questions that came through with the booking. The ETA for DETOF. Is there a timeline you guys are working towards?
Yeah. So we basically have we're onboarding clients starting in 2 weeks, pretty much. Our first set of clients. It's a closed beta though, Andy. So we're not we basically just got to get it right first. So it's a closed beta at the beginning, and then we'll probably kind of go a bit more open starting in about maybe like end of Q4, like real end of Q4, early Q1 kind of is what we're thinking. But we just got to make sure we just basically got to make sure we get that started.
And
kind of make sure we get it right.
How do we whitelist?
I'll get in touch with you, Andy. I think later on we do have like a waiting list on the website that you can join. Pretty much, I'll just like drop it in the chat here. But yeah, we do have like a waiting list that you can join if you just go to our product.
Mm-hmm.
You could kind of join that waiting list, and like we'll definitely kind of keep you in mind, I think, for the future.
Okay, that sounds like a good way to go. I'm really looking forward to following DETOF and what DETOF does. This has been a really great session, Bassil. I've really appreciated your humorous slides and and all the information you've shared with us today. Is there any other tips you'd like to share with the Australian?
Yeah. I just want to make sure I don't skip anyone. I see like that Simon also kind of like chimed in for some questions on the exchange side. And yeah, Simon, I think for us, pretty much it's all about like kind of from an API standpoint, like how have you guys opened that data and what kind of data that you can give us is kind of like super important on the, from an exchange to accounting standpoint, right? So if I showed you like the data format that we look for in DETOF, like we would like really appreciate like data format in like, just to be able to pull wallets, from wallet to the coin, the amount, and then kind of this stuff we'll do. But basically like kind of really just being able to get the right data set out of the exchanges, like whether it's through like a CSV or whether it's through like a direct API. I don't know where you guys are at CoinStash, but that's kind of like what really helps. And that's not only just on the exchange, that's also like on the chains as well. Being able to pull kind of data in a certain way, it helps the accounting community.
Okay, great. We've got another. Okay, great. Thanks. Now, we did have one submitted issue that someone is having. Clients have no idea. I don't know what that means. No idea that they need to tell us that they're doing crypto. But maybe we need to tell them that we're learning how. So what would you say to that, Bassil? How can we get these conversations started with our clients so that we can take the lead and help them?
I mean, listen, there is like a naivety to a lot of the clients that join, I'd say, in accounting, like basically like if they're doing kind of the crypto part and like they're assuming it's going to be done similar to kind of how maybe they had done kind of a previous fiat, I would say,
like
client.
The bank feed, you'll just get it off the later.
And if like the fee expectations also like very similar, that's like totally naive. Like they have to understand that it's like a 10x amount of work, especially if like that accounting firm isn't set up to take on such a crypto client. So I think one is like, that's kind of like one area I would say where basically clients have to basically change their mindset. And then the other one is like, clients are like probably like not filing, just not doing accounting and maybe not even filing taxes. Forget that. And so you're going to have like a drove of like clients, I don't know, 2023 who come in and like say, listen, like we actually like need to file for like 2020, 2021, 2022. So maybe that's what she means when she says like clients have no idea. Like it's like maybe they have no idea in terms of like, the compliance requirements on the crypto side, or even just like even reporting crypto, like just trying to shrug under the rug. So
the earlier we tell them that we're looking at solutions to make it possible, don't leave it too late. We're back to the shoebox of receipts problem all over again. I'm sorry, everyone. But and there are great opportunities in this space. Web3 is going to be huge, we think. And if you became a digital accountant because you love technology and working with clients in the space and saw that it was going to be good for your business in future, here we are again, I think. So stay curious, stay in touch, and I will send you all some links and a recording. And thank you so much, Bassil. This has been great. We'll be in touch.
Yeah, thanks for having me.
Okay.
Appreciate it.
Have
Thanks,
a good
guys.
day. Bye,
You
everyone.
too.
Thanks for
Bye,
joining.
guys.